The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the start of trading, and you got markets in positive territory. What's driving it this morning? AI investment. You know it. Alibaba this time. $50 billion. AI. Markets trading higher. S&P's right now up by about 0.2%. We're trading up 12 points at 67.26. NASDAQ 100 up a similar 0.2% or 56 points in the green. 24,882. The Dow up by about 0.1%, 46,700, and the Russell barely in the green as well by 0.1% as well. We jump over to yields. You get the 10-year right now, 4.13. So we were at about 4.1. We've pulled to lower price, higher yield. We're right back to the higher yield of about 4.3, and that's where we basically came to, whether you're talking about the acceleration last Thursday on the heels of the Fed. You back it up even a little bit further to get the Wednesday, Thursday action. There was your spike, there was your trade lower, and we're sitting right on that acceleration of the Thursday low, and that's where we've been shopping around. But 4.14, as I actually come to you, we just ticked up. 4.14, the yield on the 10-year. You have higher yield coming at you. You jump over to the dollar right now. On higher yield, you get some dollar strength, back up to the almost 98 price point. We're at 98.81. We're up by 55 pennies right now, and you jump over to gold. Holding up relatively well with the strength of the dollar. Gold above 3,800. We're negative by $12 on the session at 38.03 right now. You jump over to silver, negative by about 15 pennies, trading at 44.45, just off the highs we saw yesterday. Jump over to some of the other. Copper right now, up by about 5 pennies. Look at that volatility we just got on copper. Look at that. Now that's a 30-minute. We get into the 5-minute. And yeah, you got some volatility going on in copper this morning. Copper spiking from about 460 to 472. We're up by 6 pennies or 1.1%. All right, we check out BABA. So the race is on for AI and BABA. You're going to pop almost $13, almost $14 at the open. You're trading at 160.76. This thing been a heck of a run. You back it up, right? You're talking about lows out here. Alibaba last year, about 66. You're at 176. We back it up a little bit further than that even. You talk about how many years? From 2022 all the way to the acceleration in 2025, a 3-year base. But boy, we are breaking out, and you're breaking out even further right now. Look at that strength we got back there in February. You pull back with the markets. We're doing it again. We get some volume. And yes, Alibaba hiking their AI budget past $50 billion. Pretty remarkable. All you got to do is spend a lot of money to make a lot of money these days in AI. But the market has confidence that BABA, they're going for it, man. $50 billion, and that's over 3 years. Their CEO anticipates overall investment in AI is going to accelerate to some $4 trillion worldwide over the next 5 years, and BABA needs to keep up. You're talking about $53 billion US is the number, 380 billion won. Developing AI models and infrastructure over 3 years. Now that could go up, of course. The cloud division, they're going to launch their first data centers, Brazil, France, and Netherlands in the coming years. They're going to roll out Quen models and full stack AI technology to both develop services and the infrastructure such as chips that underpin that technology. Now, you have Chinese chip makers, of course, trading higher on that news. Okay, they have a couple in here, 10, 15%, etc. They pull up Alibaba, like we just talked about. Okay, 4 years highs. But what they don't include is how much higher it was, right? They take a 4-year high, they just pull it back to 2021. And that's where they're talking about right here, okay? A 4-year high. But as you can see in Alibaba, man, we are right into this straight line move from 319 down to $58. 319 down to $58. I think that's the entirety of the chart, is it? Yeah, no, almost. I mean, pretty remarkable, right? Where do we get to? You have a low out here of 57.20 from 2015, and you get within $1 at 58.01. It still takes you about 2.5 years to base. Now we're coming into this low here, but not a ton of volume getting in the way. Okay, there's nothing extraordinary in this consolidation. There is a case to be made. You got 150 to $2. That's where it chopped around. I mean, look, you broke that 150 area for the first time in 2017, and you really didn't break above that area almost 3 years later. So you have a 3-year, right, area of consolidation that we're coming through. Something like that, right? From the middle of 2017 to the middle of 2020 when you break higher. And it was only a 1-year hiatus before you were back. Now, this is your COVID volatility right here in 2020. Skyrocketed with everything else. And then China really fell apart on weakness, back to 66. But boy, there's nothing to say if this thing's really taken off. We're going to be at 176 right now. And you can see the straight line move, man, on Alibaba. And so, yeah, they're spending $50+ billion. So total CapEx on AI by Alibaba, Tencent, Baidu, and JD could top $32 billion this year alone, up from $13 billion in 2023. But yeah, the race is on, man. Those numbers don't even compare to what the big dogs in the US are spending. Imagine those 4 companies are behemoths. And the 4 of them combined are going to spend $32 billion this year compared to some of the numbers of Meta and the likes. So their CEO, this is Baba, has talked about hardware innovations that Baba is working on. Chips, faster computers, networking, all pivotal components of data centers. They're going to be doing it all. Not surprising. Jump around to some of our tech stocks. You have NVIDIA shares up barely in the green by about $1. Quite a charge higher and a give back. You know, my social media feed was full of, I wasn't the only one talking about it yesterday, folks, and the circulatory nature of NVIDIA, OpenAI, and Oracle. It's something to keep your eye on, man. You know, got Intel shares slightly in the green today. You jump over to Oracle shares. You know, it seemed like the whole world woke up yesterday to the fact that, man, what is going on actually? You know, we have a $100 billion investment from NVIDIA into OpenAI. OpenAI signs a $300 billion deal with Oracle. Oracle, stock goes up. Oracle uses that stock going up to buy more NVIDIA chips. NVIDIA uses that investment. When they get an investment from Oracle, their shares go up. They then invest in OpenAI. OpenAI, in turn, signs a deal with Oracle. And Oracle needs more chips from NVIDIA. It's not an exaggeration. That is the business model going on right now. And hey, $4 trillion over, since 2030, the build-out's going on. But the circulatory, they listed in their filings, folks. It is a risk. But AI, this is no dot-com bubble, man. You got companies with massive earnings, and the multiples are driving it, but the multiples are based on earnings. Oracle shares, slightly in the red. We got markets in the green. We'll come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&P's up by 10 points right now. Markets in the green. Gold right now holding well above 3,800 for the move we have going on right now in terms of stronger dollar and gold. Yeah, we're off by 11 bucks, but you're cherry picking off in terms of where we are. You're just off the highs. And you got quite a remarkable run. Jump over to the dollar right now. That is some strength, man. And gold holding up remarkably well. All right, keeping with the AI. So how about this one? And this is where it's remarkable, right? So Sam Altman on OpenAI's $850 billion planned build-out. Now, folks, this is a company that loses money, right? This is a company that loses money, and they're going to lose money for the next 3 or 4 years. And they're going to spend trillions of dollars, and they're going to have an output of 17 nuclear plants. The vast size is almost incomprehensible. They have a CFO who previously took Block public, stressed the companies are stepping in to meet severe compute shortage. But yes, in less than 48 hours, they've announced commitments equal to 17 gigawatt build-outs in partnerships with Oracle, NVIDIA, and SoftBank. At roughly $50 billion per site, they're talking about $850 billion, nearly half of the $2 trillion surge that many banks are forecasting. Now, he insists, this is what I want to get to, that the build-out is in response to soaring demand, okay? Highlighting the tenfold jump in ChatGPT usage over the past 18 months. I would totally agree. I love ChatGPT. But the tough part here is that you're never going to make enough money charging the customer, right? It's always charging the third party, as in Google. Google doesn't charge you to use their service. ChatGPT does. So now ChatGPT is going to come out with physical products, right? They got Apple's guy that's going to be designing. There are going to be physical products coming to market that are going to be battling with the iPhone, okay? In terms of we don't have physical products yet. Everybody goes on the internet to use many of the AI features. But there's no ads that run on ChatGPT right now. How are they going to weave ads into a conversational agent? They haven't tackled that yet. And yes, you have agents like Gemini for $2.99 a month, okay? But we've seen this play out over and over, and the way to maximize it is ad dollars. Whether you're talking about Google, whether you're talking about Facebook, even Netflix discover that, you know what? No, the best way to make the most off of our users is to sell ads. And I don't know how that plays into things yet. And they need a lot of money, folks. And yeah, they have a ton of users, but you got to monetize it. And ads are the way to monetize it. And I struggle to find out how they're going to insert ads without decreasing the usability and just the sheer performance of something like some of those AI chatbots. How are they going to weave that in? I don't know how they're going to do it, and they have to. You know, and you got critics out there, and I say this is not akin to the dot-com bubble when you had the Ask Jeeves of the world, right? Just printing public money without anything underpinning it. This technology underpinning this is real. But you got to turn it into enough money to be able to warrant the build out that they're going to come with. I mean, we're talking about yesterday, Bain Capital's talking about there being $800 billion shortfall. And then when you look at the circulatory nature that goes round and round. Oracle, taking advantage of their run, they're raising $15 billion. Why not? 1.65 percentage points above similarly dated treasuries. 7 parts. Yeah, 7 parts. They're borrowing $15 billion, including a 40-year bond at 1.65 percentage points above treasuries on a similar date. And yeah, they got deals. They got deals. They need money. And they got to buy NVIDIA chips. And then NVIDIA has to take that money and invest in OpenAI. And then OpenAI has to pay Oracle Cloud Infrastructure, OCI, for their products. And round we go. I keep saying it. I may sneeze here, but not... Excuse me. Oh, okay. Pretty remarkable how many of these headlines, right? You got Alibaba sinking $15 billion. Sam Altman talking about it's okay. We got $850 billion we're building out, but our products are doing great. That's not a money talk, man. How are they going to monetize this? I think it's easier almost to see how a company like Meta can monetize it because they have the revenue stream to get over this hump. ChatGPT does not have the revenue stream right now, folks. It's not even close. And I don't know how they turn a product like ChatGPT. Now, they are going to go deep into agentic, all this stuff. But that's a lot of cash, to put it lightly, right? All right, we talk a little mortgage demand this morning. Now, we have the 10-year approaching 4%. We're currently sitting at 4.13 right now. Application volume rose. Refinance demand rose just 1% for the week, but 42% higher than the same week a year ago. Mortgage applications to purchase a home essentially flat. up just 0.3% for the week, 18% from the same week a year ago, 6.34% from 6.39, with points increasing to 57 basis points to 0.54. And pressure is going to be on rates, folks. I was telling, so I'm dealing with a house right now, and that house that I talked about in St. Pete recently, we're probably going pending. Some good offers already, folks. Been on the market for 10 days, okay? Some good offers. And what's interesting is you have a few people coming in, and one buyer is thinking about buying down the rate, okay? And it's an astute negotiation tactic if you're on the buyer's side, right? You come in, if you're on a buyer's side, folks, go for it. Say, rates are so high, I'd like to include, 15 grand at closing to buy down the rate, 20 grand down. At this point, this is a $675,000 house, and they're looking for 20 grand to buy the rate down right now, okay? And I don't think I would be spending 20 grand to buy the rate down right now, because pressure is going to be on rates in the short term, okay? In the longer term, there is a real risk to higher inflation, okay? Because we're going to run it hot, right? We're going to get cuts when we have inflation at 2.9%. But you can always refinance. So to pay that money up front, you have to stay in that loan for so long. We'll finish this up and we'll be right back, folks.
As an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets in the green. S&P's up by 12 right now. We're up by 0.2%. NASDAQ 100 up by 0.2% as well. We're checking Alibaba as we open. Up by $13. Boy, and sometimes you wonder if some of these ticks, right? Be careful on market orders, folks. You always wonder how something prints like that right coming into the open, but nonetheless, not a real tick for all intents and purposes. And Alibaba up by 8% or $13 to the positive at 176. We jump to some of the housing stocks. Lennar right now down about 0.3%. KB Homes right now down about 0.6%. And DR Horton down about 0.6% as well. So talking about mortgages, talking about refinance. You know, the point I was making, right? So you're dealing with buyers potentially. Now, number one, it's a great idea to come in and do it no matter what, because negotiating tactic wise, you know, you just say to people, hey, rates are too high. I can't afford this house, right? It is a buyer's market to a certain degree, depending on where you are and who you're servicing, who you're selling to. But if you buy down your rate, okay, you got to stay in there for years to make that money back. And I think right now rates are going to be facing pressure to the downside with a new chairman coming in 9 months. And what's going to happen is you're going to have that new chairman nominated by the end of this year. Okay, so within the next 1 to 3 months, we're going to get who the president wants the new chairman of the Fed to be. The pressure is going to be on rates to be lower. The chairman himself at the last press conference said people are overestimating the ability for inflation to get away and run super hot in this economy because of the weakness in the labor market and what they're seeing beyond payrolls. The real risk is that you go out further, right? That the pressure is to run it hot. And this is just a risk, okay? You got to categorize your risk. The risk is that, yes, there's an incentive to run it hot, AI exploding, all of that, pushing the R-star a little bit higher, allowing you to drive this economy higher as you cut rates, okay? And inflation gets out of control a bit. But that's going to take some time to play out, folks, okay? It's not going to play out overnight. The Fed is not going to come in, Chairman Powell is not going to get replaced, and there's going to be some impetus to hike rates dramatically, okay? So the real risk, in my opinion, plays out 9, 12, 18 to 24 months into the future, right? But over the next year, there is going to be, it's like the wind at your back, okay? The wind is at the back to drive rates lower. So spending 20 grand right now on a house that's 675 to buy down your rate, you know, when I had people coming in with bids on a house like that, I said, you know, that's great if you want to do that. And if we were in an environment, let's say we're in the environment, right, where the Fed is hiking, okay? Yeah, you might want to buy down your rate because you're not going to be able to buy it down again in 3 months or 6 when the Fed's even higher, right? But that's not where we are right now. Where we are right now is there's pressure to cut. So I would not be spending 20 grand right now, okay, to lock that in when you got to remain in that for a few years. Now, you don't have to. You can always refinance, okay? The past is the past. If it's sunken money, it's sunken money. Nothing you can do about it. But that is what's going on right now, and it's hard to see how that would happen when you're dealing with mortgages, okay, that are still at 6.5%, folks. And you've already heard Stephen Moran talk about the third mandate of the Fed. You've heard that brought up, okay? You're going to have Stephen Moran. You're going to have Trump putting a new chairman in. Powell's probably going to take himself out, as most Fed chairs do once their chair position is done. And there's going to be drastic pressure for rates to go lower. Now, the Fed overnight lending rate does not equal the 10-year, okay? But that's where the third mandate is going to come in. And Chairman Powell said, we have 2 mandates. He said, we don't have a third mandate. But you better believe it's going to be part of the conversation, folks. And so, you know, over the next year, year and a half, there is going to be wind at the back. The only risk is that you run it too hot. And then even the people who are in the position like Mr. Moran right now, who say that we should lower rates dramatically, have to face the consequences that we ran it hot and inflation pops up. But that's going to take some time to play out, folks. That's not happening right now. Jobs are not there right now to run this economy hot. And when you have an economy that is showing the weakness that it is, Chairman Powell is making the case it's very difficult for inflation to get away from the market when there are those forces on the economy. But yeah, mortgage rates, we're in a good spot right now, folks, for rates. You know, it's been a while since we've even considered that you could get a 5 handle. And boy, I'm very excited that maybe as this economy marches forward that we could potentially get a 5 handle as you come into a new chair. And the market gets ahead of things, folks, okay? There were a lot of cuts priced into this Fed meeting. We got a lot of data before the December meeting. We got October 29th, you get December 10th out there. You're already going to know who the new Fed chair is by December 10th as well, though, okay? And the market's going to be forward-looking, and it's not going to wait until May if you already have a new Fed chair out there who's already telling the market what they plan on doing when May rolls around. All right, what else do we got going on? Yeah, so the U.S. is taking a new equity position in companies. We're picking winners and losers, folks. That's what we do. Lithium Americas. As the Trump administration seeks an equity stake in the Canadian miner, now they have a big Nevada plant, yeah. Thacker Pass Mine in northern Nevada, expected to become one of the largest sources of lithium in North America, and I get it, crucial to America, okay? Owning a business is crucial to the success of American citizens. So the White House is seeking an equity stake as they renegotiate the terms of a $2.2 billion loan from the Department of Energy. That equity surging, of course. And yeah, you have GM agreeing to buy offtake. I mean, lithium is. Batteries, of course. So as part of the negotiation, the miner requested to push out part of the loan repayment into later years. I mean, even the way it's phrased, folks, you know, if we're going to push out part of the repayment into later years, then the administration would like a very small stake. This is the quote. It's just a very small stake. It's just a very small stake. It's not even a big stake. It's just a very small stake of equity. It's a cash buffer. It's just a risk. It's just a risk stake. It's just a risk stake. All right. You know, I keep pressing it, folks, because if the government draws the line over what companies we can buy and sell as a government and own stakes in, then where does the line end? And then the government decides where it ends. And boy, I can make a lot of good arguments about companies that the government should own in the betterment of citizens, like home builders. I don't understand why that argument's not getting made. Why aren't we buying home builders and just building? Yeah, probably because that might not end well if the government just starts buying all the home builders and building, right? Yeah. S&P's pulling back a bit. We're up by 3. Coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. A little bit of selling to kick things off. There's your 5-minute action. We're trading right now positive by 3 points, NASDAQ 100. We give it up a bit on the open as well. We're negative, we're still positive, but positive by just 8 points right now. And yeah, we just traded down 70 points from where we were on the open. The Dow, the other way, up 120 points right now. Let's check out what's moving. You can jump over the Dow. UNH up by 1.6%. Goldman up by 0.5% right now. Caterpillar up by a full percentage point. Chevron up by 1% as well. Walmart up by 0.5%. Let's jump around to Walmart. It's a little bit of a bid. You jump over to Target shares up by 0.3%. TJX up by 0.6%. Mickey D's up by about 0.2% right now. So you talk a little NFL and media rights. Boy, it's got to be good to be the NFL, man. So the NFL usually, would not be negotiating their next deal until the end of the 2029 and 2030 season. It's 2025, and already you have the commissioner saying, we might negotiate next year. And they need their partners to agree to this. But the partners may agree to it because then they get to extend how long they have those rights. That's what they, but boy, it's got to be remarkable when talk about a tough negotiation where you already have the rights going for a certain amount of years, but you're going to have to renegotiate at a higher price to extend that. That's how it works though, right? Players negotiate, they renegotiate their contract with 1 to 2 years remaining. They alleviate the last year, which makes things complicated. But this has to do with, they signed a deal, an 11-year, $111 billion deal in 2021. It has a league opt-out after the 2029-30 season, except for Disney, which has 1 extra year of rights. So to get this done, the league needs agreement, as in just to be able to negotiate it, to renegotiate, to start discussions on any new deal, they need agreement from its current partners. Imagine this, right? Disney, Comcast, NBC, that's Paramount, Amazon, and Fox. You need them all to agree. I'd love to be able to hear those phone conversations. And of course, these companies are not going to want to piss off the NFL, okay? They're going to want to be in the good graces. You don't want to be the one company that says, nah, screw you, we're not going to renegotiate. Okay, that's not going to happen, because what happens? If they really play hardball, then the NFL will play hardball when 2029 rolls around. But boy, that's a tough one. And they're going to want more money. That's basically the deal. Accelerating it, what makes it difficult in early 2026, right, is that from a regulatory perspective, ESPN has a pending deal with the NFL that's going to see the league acquire a 10% stake in ESPN. To renegotiate the rights deal while that's taking place may present a conflict. If that deal goes through, ESPN may be more open to play ball with the NFL, of course, for future media, given that the league's minority ownership. I mean, they're going to be intertwined forever, man. And yeah, whether you get an 18th week of regular season play. Remember when we had 16 weeks, folks? Now we have 17, and we might get 18. They should probably do away with the preseason games. Maybe turn it into just like open practices or something like that. The NFL is such a vicious game of strong men that can break each other in half almost literally, that you understand why preseason games, man, you know, they're not the real thing, and I understand why. And they are the real thing. Those guys better play full speed. There's no way to play half speed. You know, even when playing as a kid, right? It's like you play through the whistle or you're the one that gets hurt. And in the NFL, that's the deal. There's no half in it at all. But yeah, this is a deal where you've had these other leagues renegotiating, and the NFL sees that, guess what? They can get more money already. And so they're going to come for the new renegotiation. And you know what? They should, folks, because there is nothing like the NFL and live sports. You know, it's one of the reasons why I jumped on Paramount Skydance right away, because there's nothing like the UFC. There are a few brands, right? The NBA is probably one of them. People love the NBA, although that product's on the decline. Soccer is on the rise in America, but not the same degree at all. But NFL Sundays, college football Saturdays, you know, something special about the way that it incentivizes a fear of missing out. And in the world of streaming, there's very few things that you actually have a fear of missing out on. You can always just sign up and binge, right? Now, HBO does a good job of releasing shows occasionally, but guess what? Wait till they're all released, you sign up and you binge. Can't do that with live sports. And so, yeah, they're the holy grail. Disney shares up by 0.7%. Now, Disney, they're raising their prices as well, they announced yesterday. Talk about it. Everything's so expensive. Not to harp, but I'm just talking about streaming packages are so expensive. And in order to watch all the games, you got to almost sign up for everything. So Disney announced yesterday they're going to be hiking prices by $2 to $3. The standalone Disney Plus ad-supported plan is going to be $11.99. Folks, do you remember when they launched? I think it was $4.99 with no ads. The no ads plan, $18.99. Or a $30 hike to almost $190 a year. That doesn't include ESPN. The one I signed up for recently includes ESPN because I want to be able to watch football games throughout the year and some good ESPN just in general. But I'm going to be canceling that because it's an absurd amount of money, folks. I think I'm paying up $30 to $40 a month to have Disney. I think it's like almost $40 a month, but it includes Disney, it includes Hulu, it includes ESPN in there as well. Jump over to Netflix, down about 0.4%. We check in on Alibaba, digesting their spend, up by 7.5%. You jump over to NVIDIA, flat right now. Oracle, look at that. Oracle actually below where you were on Monday. Whew. From 305 to 329, we're back to 305, just like that. You're down by 2.8% right now for Oracle. AMD shares, up by 0.6%. And Micron, I was going to say, they had some strong numbers last night, but this morning giving it back as well. Micron down by 2.2%. I say it like that because they had decent numbers last night. Look at the run this thing's been on, though. A story of expectations, folks. From 60 to 170. You break above the highs of last year. They deliver earnings that are great, and the market says, yeah, we knew they were going to be great. That's why you just traded from $61 up to $163. All right, gold backing off a bit on that dollar strength finally. Yeah, there's your pullback. We're above 3,800 when we started the program. You have the dollar almost reaching 98 right now. You got higher yield right now. You have the 10-year. 4.14%, folks. We got the markets. S&P's off by 4. NASDAQ 100 off by 24. One more segment. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets right now slipping into the red. S&P's negative by 6. NASDAQ 100 off by 22. The Dow only index currently in the green by 20 points right now. We take a look at the volume. All right, yesterday's volume, a little bit of an uptick from the last day. You make a high of 67.56. In the S&P's, you do about 1 million contracts. And yesterday, you trade lower on 1.2. NASDAQ 100, we take a look at the last couple of days. Similar action, you trade higher a couple days, and you give it back on some more volume, but nothing too drastic on that volume sell-off, right? You're bumping up against volume last couple days, within a few points of where we are on the NASDAQ 100, and you start going bigger picture. You know, I was cracking up in terms of 1 day of pullback, and it's like capitulation or you know, a pullback. Folks, this market's just relentless, man. All right, there's your weekly. Whoop, back it out. You talk about a run, man. Last week, you trade higher on about 2.4 million shares. This week, we're barely red, sitting right near 25,000 S&Ps. Pretty similar action. All right, look at the volume we got last week in the S&P. 7.5 million shares. We had options to expiration going on last week, of course. I say that as in you take a look at the 15-minute. There was your volume on the close on Friday. Bigger spike than usual, but some big action last week, man, as this market just continues higher. As the market turns red, you got Nvidia off by 0.3. Amazon, tough couple days. Look at that sell-off on the open as well. Still positive, but boy, Amazon just gave up $3. We're at 221 right now. Oracle off by about 3% right now. AMD in the green. We jump over Google shares. Whew, look at these tech stocks, man. You got some big moves. All right, folks. S&P's off by 5. NASDAQ off by 17. Stay tuned. We got our man Basil Chapman. He's in the den. He's growling and prowling. He's ready for the Tiger Technicians Hour. He's coming up next, folks. We get the S&P's off by 5. NASDAQ off by 13. We got our man Steve Rhodes coming up at 11 o'clock. Fast Market at 12. Larry Pesavento live at 1 o'clock. And I'll be back at 3 o'clock this afternoon, folks, for the Tom O'Brien Show. Have a great day, folks. Basil Chapman. He's coming up next.